Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Tuesday, December 13th. This month is quickly slipping away as we head into the holiday season. Happy holidays to everyone out there. Today we're going to take a look at Charles Schwab, and these are quick hitters, so let's jump right in and not waste any time. So Charles Schwab is a big bank out of the financial sector here. Obviously, they just like any other bank, right? Bank offerings, checking, savings, home loans, borrowing, credit cards. They offer all that. And then investment products, mutual funds, ETFs, index funds, stocks, options, bonds, CDs, money markets, cash solutions. I'm a little surprised by the cryptocurrency, but they offer cryptocurrency as well. More investment products. They offer trading research, brokerage and trading accounts. So it is your typical big bank here, right? Charles Schwab, one of the bigger, largest banks in the country here. If you want to know more about them, check them out, www.schwab.com. That's schwab.com. That is their homepage where I pulled this information from. And now the reason we are taking a look at them, they were down 3.15% on the day. We are talking about Charles Schwab Corporation, ticker SCHW, again out of the financial sector. Closed the day out December 13 at $77.76. They have a 52-week range as low as $59.35 and as high as $96.24. Even with today's pullback, they're kind of floating in that middle of their 52-week high and 52-week low. They have an average volume of 7.6 million. Today was 8.8, so more trading done today than on a typical day, but it looks like it was a lot of selling. You can see that here. It looks like early in the morning, a lot of selling early, a little bit of a rebound, and then kind of a sell-off throughout the day. Market cap of 145.158 billion. Again, very large financial company here. A beta of 0.99, so they are right about as volatile as the overall market. A PE ratio of 23.56, which means nothing really for a bank. You need to look at price to book, even though that is a high price to earnings ratio. What you'd want to do is go in here, statistics right at the top, look at price to book ratio. You'll see that for banks, you want something around 1 or below 1 speaks to undervaluation. The higher above 1 it goes, the more fair valued or above value it is. 1 would probably be pretty close to fair value, 1.2 even, depending on the bank. Earnings per share, $3.30. And their next earnings date is January 16th to January 20th. They do have a small dividend yield of payout of 88 cents per year divided by 4. They're a quarterly payer. You'll see that here in a little bit. And a small dividend yield of 1.10%. Ex-dividend date was November 9th, so you missed the last one. If you bought them now, you would not get their next dividend. 1-year target estimate is $91.21. This information was all brought to you by Yahoo Finance. I'm not affiliated, just where I like to go for information. Now let's jump over to another source. And as I always say here, and like to say here, we're going to look at stockanalysis.com. The one before on the previous slide was Yahoo Finance. I always recommend more than one site. These are not the only sites out there you can pull information, just two that I like to pull information from. They present the information in a very nice format, in my opinion, very user-friendly, especially for those who may be tuning in who are newer investors. They can start to understand these numbers and what they mean, so that's why I use them. There are other ones out there, like I said, Seeking Alpha is one, Motley Fool, many others out there. So you pick which ones you like and that you're comfortable with, but make sure you are always looking at more than one source to make sure you can back check and make sure the information you are getting is accurate. Now over again to stockanalysis.com. I'm not affiliated with them either, just the other source I like to look at for information. And according to the 25 stock analysts they've had to take a look at this, they call it a consensus buy. They have a low estimate of $81.81, and it's currently sitting lower than their lowest estimate, so that would be a 5.29% increase if it came back up to their low. An average estimate of $93.18, which would be a 19.92% increase in the stock price. And if it happened to hit their high of $109.20, that would be a 40.54% increase in the stock price, and you would be collecting that 1% dividend along the way as you waited for it to come back up to this high. Now, this is where I would typically show you my position, but I do not have a position in Charles Schwab. It is not in my portfolio. I have other banks and other investment stocks, companies that I like to invest in. I like Prudential Financial is one, Bank of America, Huntington Bank are three that I prefer. So that's where I put my money whenever I'm putting money into this sector. But SCHD may be one for you. Schwab there may be one for you to look at, but it's just not in my portfolio. They do pay out quarterly, as we said. They pay out 22 cents per share. They have a payout ratio of 24.20, so it is pretty low. Lots of room for growth there. Dividend growth is nice at 16.67%, so they are growing very nicely. The financial sector with the interest rates going up is one that has been hit pretty hard, so I would personally, if I was interested in this company, I would look to watch them, put them on my watch list, and maybe see if they pull back closer to that 52-week low and get them as cheap as possible. That way that dividend yield is a little higher. That dividend yield for me, I'm a little older in my early 40s, looking for more on the income side, so I'm looking for higher yielding stocks. Now, don't go chasing yield. That doesn't mean go out there and invest in everything, with a 7-8% yield. Make sure the companies, if they have a higher yield, company typically comes higher risk with higher yield, so make sure that they are good companies with a lower payout ratio that covers the dividend, right? Their free cash flow should cover the dividend plus some. I like to look at companies with a 75% payout ratio or lower. So this would fit that bill as far as payout ratio. And depending on how high their dividend is, this being a low dividend, 1%, you would want very high dividend growth, which this does meet that criteria, right? So for someone younger who has a lot of time, 10, 15, 20 years before they're thinking of retiring, you buy something like this because of the dividend growth, right? 16% growth a year, that is very nice. All right, that again, like I said, these are quick hitters trying to find value in the market for you, for me, for anyone watching the videos out there. A lot of pullbacks lately. Market is down, so make sure you are weeding through the bad companies. Make sure you're getting that free cash flow, growing free cash flow, companies that return a high margin on their invested capital, good companies that are growing, that are going to be here for the next 10, 20, 30 years that you can count on and depend on and put your money to work for you. That's the idea. The dividends paid out, increasing that passive income with every dollar you invest. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think. Do you invest in Schwab, or do you use it as your bank? What do you think about them? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. Don't moment sharing my opinion. Investing for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation and circumstances and select criteria. So seek the advice counsel of a certified financial advisor.